Hey, Crypto Hotep here with another investing video. Uh, this is week number 13 of the family portfolio, and you may be wondering why I'm showing you a very blurry video here. Well, week 12, it seems as though YouTube didn't download it as a high definition video and just did standard definition for whatever reason. So it looks like this. And you guys know, typically, if you followed these videos, every new video, I like to look back at the previous video for the balance of our family portfolio and then what the gains looked like. Very hard to tell here. I believe it was 658 though with the balance. And before I begin, this none of this is financial advice by any means. Please consult a professional before you invest or trade stocks, crypto, metals, any volatile asset. And with that being said, um, I also do want to put a little PSA out there in terms of the family portfolio. If you are following my channel, following this page, please go to, or if you aren't, please go to week number 1 to understand the methodology between the quote unquote family portfolio. I'm just taking basically my family on the investing journey with me, with stocks of their choosing. We're using M1 Finance as our broker of choice because M1 Finance technology is very good with creating individual pies, which include individual stocks. I created a short list of stocks my family chose from, and I constructed their pies related to each family member. And all we're doing are just tracking these stocks, tracking what I believe, any changes I believe we should do, in just the overall journey and any information that I want to give on these videos as well. Hopefully, these videos will be beneficial to my family. And if they're beneficial to you, great. Feel free to like, subscribe, comment. So with that being said, we'll jump in here. Last week, I'm trying to zoom in. It's like it makes it worse, but it was 658. Looks like it was 658.70, and we were up about 529. I think I also put this in the description here. Let's see, 658.22, and we were up 497, so almost 5%. And so this week, let's see what we got here. We are up to 682.22 with a gain of over 8% at 8.18%. And our dividends have remained, actually, our dividends actually increased to $3.54. That's fantastic. Let's see what's been going on with this account within the week. So it looks like within this week, we've had a lot of dividend action. That's what we like to see. And sidebar, one of the things that I've been teaching my family or trying to bestow upon them in terms of information is the importance of dividends. I believe dividends is one of the pathways to generating wealth and trying to generate that wealth, quote unquote, while you sleep, like Jimmy Buffett says. So if you're unfamiliar with dividends, there's a great book called The Great Little Big Book of Dividends, I believe. But it is a very good book, breaks down dividends, the importance of dividend versus holding just stocks for gain and growth stocks. And it's really eye opening. And there are also great dividend channels on YouTube that you can follow as well. So, with that, these all dividend payments are from my account, quote unquote dad stock. So we have Kroger, CHD or Church and Dwight, basically Arm& Hammer, Visa, Aflac, J&J, Johnson & Johnson, and TJ Maxx. So again, with these amounts, we never like to look at the actual dollar amount because it's going to be small, right? We have a small account. But we want to look at consistently generating this income just for holding these stocks. And if we can generate these quote unquote pennies here with the amount of stock that we own currently, then that gives us motivation to continue to put money in, to invest in, because these amounts will grow as our holdings grow in these companies. So all in all, good to see. We had a couple buys today. So we have 5 buys today. Tesla, more than likely that's for our youngest. McDonald's, more than likely that would be for our oldest. Celsius, more than likely that's for my wife, as you guys already know. Amazon, probably for our middle. And then Apple, this was probably for myself. And sorry if I sound a little nasally. Again, those allergies are in full force here. Okay, and let's look at the portfolio and let's go through the breakdown here. We always do bottom up. Surprisingly, my wife her stocks are on the lower end. So my wife has a year-to-date rate of return of 6.34%. Still not shabby. What has dragged her portfolio down, because my wife was in the double digits? Well, Celsius has had a true correction in price right here, down over 3.94%. Celsius right now is trading in that $74 range, as you can see here. And then you can see around June 4th, there was a huge dip in price for Celsius here. So, it was bound to happen. It's been Celsius year 2024. So a little correction shouldn't be a problem. I know my we're gonna continue buying Celsius for her. Google's still up double digits, over 24% with Google. And then Pepsi. Um, Ironically, I did find out today that Dr. Pepper has dethroned Pepsi as the number 2 pop beverage in the U.S. Number 1 being the king, the GOAT, Coca-Cola, of course. But we'll go back here. Okay, let's look at our oldest stocks. Oldest, as we know, we keep it simple. Way to return over 2.5%, 2.63%. McDonald's, Apple. McDonald's still bleeding a little on McDonald's, down over 9.25%, but Apple up over 15.5%. All in all, I'm okay with holding these 2 stocks. Our youngest is moving up the ranks here, up over 9%. If you've been following the channel, our youngest has had a hard time, not really, but their stocks have had a hard time with Tesla, Nintendo, really dragging it down. But as we've always said, you buy in the red every time. Buy in the red and hold the stocks of good quality companies, and you will be just fine. I think the biggest thing with investing is continuously putting money into stocks that may be red over an extended period of time, because you don't really know when they're going to turn around. You don't know when that spike can happen. But if you honestly believe in those stocks, believe in those companies, believe in their mission, then it's very easy to put money into them. With that being said, Nintendo has been dragging our youngest portfolio down for weeks, almost months. But look at that. We continuously are putting money in there, and now we're up over 8% year to date. Tesla has a wild road, but I mentioned that our youngest can hold Tesla because of that volatility, up over 5%. And then Apple, fantastic, double digits, up over 12%. You love to see it. All right. And then our middle is year to date, up over 10%. I think this is the first time our middle has been almost at the top here. So up over 10.5% here, all in the green. Nintendo, just like our youngest, up over almost 8%. Amazon, up over 5%. And then Costco. I've said this before, I'll say it again. They counted Costco out at 700, but Costco sales have been consistently good this year, and they just keep blowing their numbers out of the water. What does that mean? That means her position in Costco is up over 17%. Just fantastic. And then we will go to mine. Up over three, almost 3.5% here. And I am all in the green today here, or this week, I should say. So technology up over 11%. More than likely, that is because of NVIDIA. I can kind of bet your bottom dollar right here that it's because of NVIDIA. And yes, it is. So up over 33% for NVIDIA, up over 33% for Google, up over 11.5% for Coinbase, up over 11 or up over 18% for Apple. And then we have Amazon, Microsoft. Meta is down. AMD is still down over 20%. Am I worried about AMD? Nope. This is exactly what I just mentioned. Still buying in the red when you believe in that mission of that company. AMD with AI, you can't paint a better narrative for me. Consumer staples up a little bit over 0.25%. Industrials and energy are still in the green at 2%. It has ticked down though. If you've been following, the video, industrials and energy has been carrying my portfolio greatly. I think once they were up 10% collectively, then they went down to 8. So, it is, consistently going down week over week, still in the green here. Restaurants and food were up over 3.5%. And then finance, we'll click into finance here. Finance here, we have Aflac. Aflac hit an all-time high, a 52-week all-time high for this year. I believe it hit today, actually. So naturally, that's going to be up 7.5%. Amex, 4.5%, up over 4.5%. Moody's has been doing really well, up over 3.5%. And then Visa, not almost down to 1%. Not really concerned about that. So all in all, our stocks are doing really well here for the family portfolio. We are closing in on almost $700. It's been great. Again, this is week 13, right? So almost 3 months, and we're in June. So around, I would say, April or so, it's fantastic to see kind of where we've come within that time frame, right? Um, you know, looking at the balance that we had started, almost 3 months ago, or over 3 months ago, I should say, and until now, it's really encouraging to keep that path and keep moving forward. So just quick recap here: 682.22. We're up over 8% year to date. Market gain of around $30. Dividends total that we've acquired $3.54. And the stock today that we are going to be looking at is Vanguard, the Vanguard S&P, or VOO, VOO. The reason I'm doing this ETF and not an individual stock is because there are a lot of individuals who are just getting into trading stocks and maybe aren't really familiar, right, with stocks. Let me do this real quick. Let me log in here. Okay. All right. There we go. And so, as I mentioned, with VOO, this ETF is a very, very good ETF, very easy ETF. And it's really, it's a good, like, dipping your toe in water for investing, right? If you're not familiar with a lot of companies, and you don't want to look at financial documents, you don't really want to dig deep into the balance sheets or anything like that, I always say, at least for the sake of your money, invest into something quality like VOO. This tracks S&P 500, and it's managed. It's a managed ETF, so you don't have to worry about taking out stocks, trying to manage underperforming stocks or anything like that. This is done for you. It's like cruise control. And the reason we go with VOO is because VOO has a very low expense ratio as well. So, i.e., it doesn't cost a lot of money for Vanguard to manage this ETF for you. Okay. And the main thing I always want to ensure that people look at is markets are naturally intended to go up. And this kind of shows this, right? So, obviously, this is only going back to 2010, but you can go back further than that. And the VOO chart or S&P chart, whatever one you want to look at, consistently goes up over time. Yes, are there dips? Yeah, absolutely. 2020 was a dip, right? 2018 was a dip. And if this chart extended out in 2008, there would be a dip there as well. But if you have a long-term view of your investments, then these short dips should not be a problem. And historically the VOO or S&P 500 has generated at least a return of 8 to 10%. If you look across this long term, let's just look at 5 years. We'll go to 5 years. 5 years, you have a rate of return of 89%, over 89%. Is that like crypto numbers of 1,000 plus? No, it's not. But again, this is a little bit more safe. It's not guaranteed, nothing ever is, but it's a little bit more safe with putting your money in. So I do like the VOO. We invest into VOO. I buy, the S&P every week consistently, and DCA even in it. Even though I know how to manage stocks, even though I have that type of skill set, I still invest into this because it's just very easy. And if you look at the dividend, it also does pay dividends. Small dividend yield at 1.31%, does have a growth of 5.81%. Payout ratio is below that 60 to 70% threshold I normally take. And you can just see here, typical 10-year average for dividend growth, or dividends, I should say, consistently in an uptrend here. Dividend growth is somewhat in the middle of the pack. So again, you're not gonna get super rich off of just the dividends here. It's more of the actual growth of those companies within the ETF. And honestly, that's okay. I think VOO is a fantastic option if you're just getting started with investments. Any broker has VOO. I have not met a broker that doesn't have VOO as of yet. So, with that being said, guys, uh, if you like this video, feel free again to like, comment, or subscribe. Hopefully, this video will also be in HD and standard, so it's not blurry. But as always, if you want to see anything else, if you want me to chart anything, or um, if you want me to improve on anything with my videos, just let me know. And hopefully, these have helped. And as always, thank you and happy investing.